Good afternoon, everybody. Thank you very much for joining and welcome to Eunomia's webinar on the EU's Corporate Sustainability Reporting Directive. I'll start by introducing Eunomia and this webinar series. Eunomia is an international independent environmental consultancy. We have expertise across the circular, carbon and natural economies. And across these themes, we provide data-driven and evidence-based research and consultancy. Our clients span the public, private and NGO sectors. We have over 23 years of experience and over 150 employees across offices in the UK, Brussels, New York and Auckland. Today's webinar is part of our Fit for the Future webinar series, which we are running throughout 2025 to help our clients to prepare for upcoming policy changes and requirements, such as the Task Force for Nature-Related Disclosures and the Packaging and Packaging Waste Directive, which will be running later this month, for which we'll provide a link at the end to sign up to. Finally, to briefly introduce myself, I am Kat Rowland. I'm a senior consultant at Eunomia. I have over 5 years of experience in advising clients in sustainability reporting, corporate decarbonisation and compliance with EU policy. And I am looking forward to talking you through the CSRD today. Some quick webinar etiquette points before we begin. Your microphone should be turned off, but you'll notice videos are on because it's much nicer presenting to some faces. The chat function is disabled, but please do feel free to drop any concise questions into the Q&A function. We have about 30 minutes for the main content of the webinar and about 15 minutes for Q&A at the end, during which we'll endeavour to address those questions. The purpose of this webinar is for you to feel equipped with high-level knowledge of the Corporate Sustainability Reporting Directive and how the recently proposed Omnibus package might change it, an indication of how these directives may affect your business and what this would mean or look like for your corporate sustainability reporting, and then also who to speak to within Eunomia for further support within this area. So, diving into today's webinar topic, the EU's Corporate Sustainability Reporting Directive, or as we're referring to it, the CSRD. So during the webinar, we'll cover these main areas. Firstly, the background to and the aims of the CSRD, why has it been introduced, what its purpose is, how it relates to other policies such as the NFRD and the ESRS, and we'll do some acronym busting later on. We'll then talk about the Omnibus package, which is a proposed simplification to this CSRD, which was announced last week, and how that will change things. We'll then cover which companies does the CSRD apply to and what the thresholds are for inclusion and how these have changed in the Omnibus. Next, we'll discuss what does a business have to do to be compliant with the CSRD, what it entails. We'll then look at the proposed timelines for implementation and again, how this has changed within the recent Omnibus proposal. And we'll end with discussing what this could mean for your business. So starting with the background to and aims of. The CSRD has been introduced as part of the European Green Deal, which is a set of policy initiatives aimed at making Europe carbon neutral by 2050 by transforming the EU's economy for a sustainable future. It replaces the Non-Financial Reporting Directive, which was introduced in 2014, which required large listed companies to provide non-financial disclosure documents. The NFRD also introduced the concept of double materiality, which is core to the CSRD. So the purpose of the CSRD overarching is to lead to or to catalyse change within businesses to prioritise and integrate sustainability as a strategic priority, which then in turn leads to increased corporate accountability and transparency for stakeholders such as investors. To do this, the CSRD has mandated new requirements for corporate sustainability reporting, which has significantly increased the number of businesses which are in scope. However, there has been some pushback to the CSRD in terms of the reporting burden, and consequently a simplification package or an omnibus has been proposed. The most significant changes that the omnibus have brought in is a really significant reduction of about 80% of companies from the scope of the CSRD, and also a 2-year delay in reporting for companies which have not ever really started. And we'll cover those in a bit more detail later on. The CSRD is a directive rather than regulation. EU member states and EEA countries, which is Iceland, Liechtenstein and Norway, were required to transpose the directive into national law by July the 6th in 2024. This means that they can either transpose it directly into national law, or they can extend or gold plate the directive when they transpose it, for instance, making the requirements more stringent. This map indicates which EU member states have transposed the CSRD so far. You can see that most have done, some the draft are still in progress, and there's a couple where it hasn't been transposed yet. As a non-EU country, the UK does not need to transpose the CSRD into national law. However, as we'll discuss in a bit more detail later on, the CSRD will still impact large UK companies with EU subsidiaries, and as we'll also discuss later on, the principles of the CSRD for impactful sustainability reporting will be valuable for companies regardless of a need for compliance. Before we go into more detail of the CSRD itself, we're briefly going to discuss the alphabet soup of acronyms that you might come across when looking into the CSRD. First up, you have the NFRD, the Non-Financial Reporting Directive, which, as I mentioned earlier, is the predecessor to the CSRD. It required large listed companies to report on matters relating to environmental impact, social and employee issues, governance, diversity, and human rights, and it really laid the groundwork for the sustainability reporting requirements that are now listed in the CSRD. Next up is the Corporate Sustainability Due Diligence Directive, referred to as the CSDDD or the CS3D. Like the CSRD, the CSDDD was launched as part of the European Green Deal. It aims to ensure that businesses really take responsibility for any negative impacts of their operations through creating a standard for due diligence strategies regarding human rights and environmental issues through the supply chain. The distinction between them is that the CSDDD requires companies to take that environmental and social responsibility, whilst the CSRD ensures that companies are transparent about reporting on these impacts. Next up is the ESRS, or the European Sustainability Reporting Directive. So the CSRD is that overarching legal framework that mandates companies to report on their sustainability performance, and it's accompanied by the ESRS, which was developed by the European Financial Reporting Advisory Group, or the EFRAG. So ESRS complements the CSRD by providing the specific guidelines and methods and metrics on how to effectively report on this information to meet the requirements of the CSRD. So the ESRS has been designed to ensure that sustainability reporting is consistent and comparable across the EU, and it also aligns with existing frameworks, voluntary frameworks such as the GRI. Then finally, we have the EU taxonomy for sustainable activities. This defines and identifies environmentally sustainable activities and requiring business to report on the share of their revenue, CapEx and OpEx linked to these activities, aiming to guide investments and to prevent greenwashing. So we're now going to think about the omnibus approach. An omnibus approach is when a number of related laws are all amended simultaneously to enable closer alignment and avoid inconsistencies. This omnibus package has proposed changes to the CSRD and the CSDDD and the EU taxonomy simultaneously in an effort to streamline company reporting. It was introduced in response to concerns relating to the reporting burden and the complexity for businesses, and in line with the EU's competitive compass strategy. As outlined previously, the major changes proposed are a significant reduction in the number of businesses that are in scope, and also a reduction in the number of data points to be reported on. Some businesses have really welcomed the proposed omnibus changes as a way to save on time, save on resources, and to ensure competitiveness in a global market. However, other businesses, particularly some investors, have criticised the omnibus as a plan to water down the CSRD and weaken the accountability of reporting businesses, whilst also introducing some uncertainty for reporting businesses. The omnibus has received a lot of attention since it was released last week, but it's important to remember that it is a draft proposal and that until it has been reviewed and amended and voted on by the European Parliament and the European Council, it will not change the current CSRD plans as have been transposed into EU law. The European Commission has said that it will fast-track the process for the omnibus to be reviewed and has asked the European Parliament and Council to treat it as a priority. If it's transposed, if the omnibus is accepted, it will need to be transposed as the CSRD has been, but as of yet, the timeline for that is unclear. So now going to start thinking about which companies the CSRD actually applies to. So the CSRD intended to significantly increase the number of business that were within the threshold for reporting compared to the NFRD. The NFRD applied to large public interest entities with over 500 employees, and there were approximately 11,000 businesses in scope. The CSRD increased this so that any business that fitted into 2 of these 3 criteria would be eligible, either exceeding 250 employees, having a net turnover that exceeds 50 million euros, or balance sheet assets exceeding 25 million euros. And this has increased the number of reporting businesses to approximately 50,000. Under the proposed omnibus simplification, the threshold for business size has increased from 250 employees to 1,000 employees, though the thresholds for turnover and assets are unchanged. And as you can see, that then decreases the number of reporting companies to roughly 7,000 businesses. So now we're going to specifically look at the relevance of the CSRD for SMEs and small and medium enterprises. So the NFRD was not applicable to any SMEs. Under the CSRD, listed SMEs over a certain size would be included under the CSRD reporting requirements, although they wouldn't be required to report until 2027. The CSRD also proposed a non-binding voluntary SME standard for companies that were not required to report under the CSRD, but which nevertheless wanted to remain competitive in terms of their sustainability reporting. And the VSME kept the core principles of the CSRD, but removed some of the complexity. Now, under the omnibus, as you can see, there will no longer be a requirement for SMEs to report. I think it's important to note here that the requirements for value chain reporting in the CSRD, aka collecting information from your supply chain, will mean that even under an omnibus future, an SME is not required to report, there may still be investor pressure to report on sustainability information and/or requests from larger companies which they supply to publish that information for inclusion in those reports. And this is where the terms on the right-hand side come in. The CSRD included a commitment to have a value chain cap so that the reporting complexity of larger organisations would not trickle down to smaller companies in their value chains. The omnibus proposed that there would be a delegated act which would be based on the voluntary SME standard, which would act as a shield by limiting the information that companies that are required to report on the CSRD are able to request from companies which are not, thereby reducing any value chain trickle down and reducing any reporting complexity on businesses that are not required to report. So we've thought about companies that are in scope of the CSRD and also thinking about SMEs. And we're now going to think about how the CSRD will be applicable to any non-EU companies. So though it is an EU directive, the CSRD will also apply to companies based abroad that have a presence within the EU. So the CSRD will apply to these companies, UK and non-EU companies, if they fall into any of these 3 categories. Firstly, if they have securities listed on a regulated market in the EU, and if so, CSRD compliance is required if 2 of the 3 criteria on the left-hand side are met. The middle category, if the business does significant business in the EU, and there are 3 criteria for that as well, relating to annual revenue exceeding 150 million euros, or that has an EU subsidiary or branch generating a net turnover exceeding 40 million euros, or an EU subsidiary that meets 2 or more of those 3 criteria. And the category 3 are whether those companies were previously in scope of the NFRD. It's a little bit unclear of how this will work in practice relating to group level, etc. But in general, this is how it will work. And this will be relevant for businesses reporting in 2029 for their 2028 financial year. We'll get onto the timelines in a bit more detail later on. So now getting into what would the CSRD actually mean for a business that's in scope. So the CSRD has mandated for businesses to undertake very specific reporting requirements, which are overall aiming to make sustainability reporting both more detailed and more standardised. So firstly, there is the content on which businesses are to report on. These cover environmental, social and governance themes and are included in the ESRS. And we'll discuss that in a bit more detail later on. Secondly, and this is one of the really core concepts of the CSRD, businesses will be expected to undertake a double materiality assessment. This is a reporting framework in which businesses evaluate and report on sustainability matters from both an impact and a financial perspective, and we'll provide more details on that in the next slide. Firstly, I'm going to briefly outline 3 other requirements in the CSRD. One of the expectations on businesses under the CSRD is that companies must publish their sustainability information integrated into their company management report, such as an annual performance report, which means that a business's financial and sustainability information will be published at the same time. Secondly, is that disclosures will need to be published in a standardized digital XHTML format, and this is meant to provide a clear, standardized format for company sustainability reporting, therefore enabling an easier comparison between companies. The final point to touch on is the requirement for assurance of data. The CSRD included a mandatory requirement for companies to have limited third-party assurance for their reports, moving to the more stringent reasonable assurance requirements over time. However, the Omnibus has proposed to remove the requirement for future reasonable assurance requirements, so it's expected that the assurance requirements will remain as limited. So we're now going to look at the first 2 of these points in a bit more detail, starting with the double materiality assessment. So as I mentioned, the NFRD introduced the concept of DMAs, but the CSRD has really introduced the concept to a much larger number of businesses. As you can see, a DMA, a double materiality assessment, encompasses 2 dimensions. The first dimension is the inside-out impact materiality. This means how a company's operations and activities impact the environment and the wider society, and whether this impact is material, aka significant. This impact can be positive or negative. It can occur over short, medium, or long-term horizons, and it includes the company's operations, value chain, products, and services. Then the other dimension of the DMA is the outside-in financial materiality. So this means how risks or opportunities might affect the company's financial performance. This dual approach, this double assessment, ensures a comprehensive view of sustainability. It aims to address the needs of a broad range of stakeholders interested in both the company's impact, but also how external factors will affect the company itself. The completion of a DMA should enable a company to understand and be able to act upon identified impacts, risks, and opportunities. It's key to note that the requirement for businesses to undertake a DMA has been retained in the Omnibus package proposal. So that hasn't changed from the CSRD that it's been transposed into EU law. One of the really key elements of a DMA is engaging stakeholders, both within and external to your business. Those key stakeholder groups are firstly affected stakeholders. So that means individuals or groups whose interests are influenced by the organisation. So that might be employees or suppliers or customers. And then the other key stakeholder group is the users of sustainability statements, such as investors. And stakeholder engagement of both of these groups in the DMA is meant to improve the quality and the objectivity of the DMA exercise. So now we're going to briefly look at what a company that is in scope of the CSRD would actually have to report on. As we discussed earlier, the reporting framework for the CSRD has been developed by EFRAG and is called the European Sustainability Reporting Standard. It's split, as you can see, into cross-cutting standards and then topical standards. The DMA process, which we outlined in the previous slide, informs which of these 10 topics are material and need to be reported on. So firstly, the cross-cutting standards. These are split into ESRS general requirements, which provides the general framework for reporting and introduces concepts such as double materiality and the need to identify and include stakeholders. And then ESRS 2 lists the reporting requirements which must be followed under the topical standards. So as you can see, these 10 topical standards cross environmental, social, and governance themes. The CSRD has proposed the CSRD states that there are over 1,000 data points to be reported on. This covers qualitative and quantitative measures across short, medium, and long-term considerations. It spans the entire value chain of a business. So for instance, mandatory reporting of Scope 3 emissions will be included. Now, the Omnibus has proposed to substantially reduce this reporting requirement by removing some of the data points that are deemed least important, though there's not currently any clarity on which data points this may be, and also by proposing to prioritise quantitative data points over narrative text. One of the proposals of the CSRD that has been removed from the omnibus package is the ESRS sector-specific standards. So previously, the CSRD included requirements for sector-specific ESRS standards to be adopted in 2026, but this has now been proposed to be removed under the omnibus. So now we're going to briefly look at what some of the first CSRD compliant reports look like. So these reports have all been published over the last month or so. You can see that they are all annual reports for the 2024 financial year, and as per the CSRD requirements, their sustainability reporting has been integrated into their annual reports. I'd also say there is a really useful crowdsourced platform called the Sustainability Reporting Navigator, which is a publicly produced database of reports that have been published that are CSRD aligned. So if you're interested in looking at some examples, I'd recommend finding the Sustainability Reporting Navigator. So these are some of those reports that have already been published. Now, looking inside these reports, we've collated some examples of the outputs of the double materiality assessments. So your top figure is a screenshot from AP Moller Maersk, their first CSRD aligned integrated annual report for 2024. And they've reported the themes that they deem material across environmental, social and governance themes. And each of these themes is assigned a classification of either negative impact, financial risk or financial opportunity. However, as you can see, presentation of these material impacts isn't standard. So in the bottom left-hand corner, we have SAP's 2024 integrated report. And that follows a more graphical approach to reporting material impacts. So our x-axis is the risk and opportunity score, our y-axis is the impact score, and a higher number implies a higher risk or impact. Anything sat in that grey area at the bottom left did not meet the disclosure threshold, meaning it was not reported on according to the CSRD. Now, the bottom right-hand corner is an extract from Ørsted's DMA, which was conducted and reported in their 2024 annual report, published a few weeks ago. They've flipped the axes from the SAP example, so here the y-axis represents financial materiality and the x-axis shows impact materiality. Like the SAP example, the topics that fall into that lighter coloured bottom left corner are deemed immaterial as a result of the DMA process and have not been reported on. So now starting to think about the timelines for implementation, we know who's in scope, when am I going to have to report? So the CSRD was signed into law in 2022, and the deadline for member states to transpose their directive into national law was July 2024. As we saw in an earlier slide, several member states have missed this deadline. But in terms of deadlines for companies that are in scope, there are 4 waves of companies that will be reporting. Wave 1 is that first tranche of businesses that were already subject to the NFRD, and they are due to publish their CSRD compliant reports in 2025, in this year, for financial year 2024, and the previous slides include some examples of that. Wave 2 are large companies, which are those that meet 2 of the 3 criteria of 250 employees, balance sheet exceeding 25 million euros, turnover exceeding 50 million euros. And those companies are currently scheduled to report in 2026 on their financial year 2025 data. Then we have wave 3, and that is listed SMEs, and they are due to start reporting in 2027 for the financial year 2026. And then finally, wave 4, that is non-EU companies with significant EU operations, and they will begin reporting in 2029 for financial year 2028. However, it will come as no surprise that the Omnibus has proposed to change this. It has not changed the timeline for companies that are already reporting under the CSRD, those companies that have already reported 2025 reports for financial year 2024. But there are significant changes for wave 2 and wave 3. So large companies that are not previously subject to the NFRD that were due to be reporting in 2026 for financial year 2025. There's been a 2-year delay to this proposed in the Omnibus. So those companies will now report in 2028 on their financial year 2027 data. And then wave 3, which were those listed SMEs, will not have to report at all. Under the Omnibus proposal, the threshold of size for inclusion is 1,000 employees, over 1,000 employees. So SMEs are no longer required to comply. But there'll be no change in reporting timelines for wave 4, which are the non-EU companies with significant EU operations. So that's as it was, due to be reporting in 2029 for the financial year 2028. So naturally, one of the most significant questions that businesses in wave 2 or wave 3 will be asking themselves is, what do we do now? There's uncertainty regarding the scope of businesses for inclusion. There's uncertainty regarding the timelines for implementation, and there's even uncertainty regarding what will actually have to be reported on. So Eunomia's interpretation and recommendations, given this uncertainty, are firstly to not assume that the delays proposed by the omnibus are confirmed. The omnibus is still in flux. It still needs to go through processes of review and signing off by the European Parliament and the European Council, and it won't be finalised until late this year or early next year. Therefore, we think that organisations should kind of take a step back from the compliance angle and really begin planning their sustainability reporting journey, regardless of compliance status, whilst closely monitoring regulatory updates. And we think that one of the key concepts to think about here is really the value of sustainability reporting beyond regulatory requirements. So regardless of thresholds for inclusion, the steps taken to undertake CSRD compliant reporting can really be exceptionally valuable in terms of collecting a broad range of data, learning from those data, learning insights, engaging with stakeholders both inside and outside of the business, and considering timelines and strategic plans for disclosure of data. Now, finally, we'd like to share a bit about how Eunomia could help you with these processes. We've undertaken double materiality assessments so we can help to qualify what sustainability topics are key to your business and develop strategies to help you do this. We have extensive experience in stakeholder engagement and upskilling stakeholders to understand more about the relevance and benefits of the CSRD. We can undertake gap analyses to give your company certainty on the completeness of your data required for CSRD and to create a CSRD data strategy. We can undertake risk assessments to assess the preparedness of your business for EU corporate sustainability policies. And finally, we can help with the strategy, implementation and review for setting a corporate sustainability strategy. Thank you all very much for your attendance and attention. I hope that this overview of the CSRD was useful. You can see on the screen some QR codes. The top one is to sign up to the next webinar in this series, which is on the Packaging and Packaging Waste Directive. And then the bottom one is a contact form to get in touch with any of the experts at Eunomia, and our email addresses are on the left-hand side. So now over to the Q&A.
Hi everyone, my name's Richard Waters, so I'm Head of Strategy at Eunomia. Thank you very, very much, Kat, for your comprehensive overview of CSRD and the particular challenges that we're all trying to navigate at the moment as the omnibus proposals are made. There is still time in the Q&A tab for anyone to type any questions that they have. If there aren't any, that's also not a problem. We had received a couple ahead of the webinar, so whilst we wait for any others to be added, I'll just quickly perhaps ask them. And Kat, if it's okay, the first one is quite a high level one actually, about the omnibus and the overall sentiment about whether it's a good positive step, that it's aiming for simplification and trying to reduce the regulatory burden, or whether you think it's a significant step backwards, or is it kind of a bit in between and a bit depends? I'm interested in your thoughts on that, please.
I think, like a lot of things, there's probably a middle ground between the two that is optimum. I think the CSRD did bring quite a large reporting burden to a lot of companies, including SMEs, that even if they've had a couple of years to prepare for it, a huge number of data points to include. So I think that potentially reducing the number of SMEs to be included might be valuable in terms of boosting competitiveness. However, I think that having a more standardized approach to sustainability reporting is necessary when we do our work. One of the biggest concerns that companies have is that there's so many different standards, voluntary standards to report to, and that having a standardized approach, I think, will be incredibly valuable, both for consumers and investors to be able to compare, but then also for the businesses themselves in order to be able to have a more standardized process to follow, which will in turn reduce reporting burden. So I think the omnibus is a really good thing in terms of standardization and simplification, but I think that removing all of those companies in one fell swoop might have gone a bit far. So my feeling is that there's a middle ground. I also think obviously the omnibus is currently in draft form, and there's likely to be 2 or so rounds of comments and approvals and consultations, etc., within the European Parliament and European Council. So it might well be that between those two, a middle ground is reached between the CSRD as it's currently in EU law and the proposed omnibus changes.
Yeah, that makes sense. And I guess because of the uncertainty, I don't think we'd be recommending any organisation to down tools and confidently think that they aren't going to need to be involved. And I guess, as you mentioned, the objectives of what CSRD is trying to do and better transparency and accountability is a positive thing for all businesses anyway, which is great. We have got Martin actually in the chat has asked a really interesting question actually, and let's see if we can navigate it. So for SMEs that are now unlikely to have to report against CSRD if the omnibus goes through as proposed, is that going to make it more difficult for them to support any obligations they have to support under CSRD if they're providing services to those larger organisations?
I think that's where the voluntary SME standard comes in that it still kind of keeps the core principles of the CSRD and the breadth of reporting requirements, but it trims it down a bit to remove kind of the really nitty gritty. So I think following that is probably a good step for an SME in terms of you're still following the spirit of the CSRD, you'll still be able to provide the information that maybe your supply chains will be requesting. I think there's also this idea of the shield or the value chain cap, which the omnibus has proposed. And the purpose of that, as I outlined, is to try and ensure that that doesn't happen, that companies are requesting information from smaller companies that are not within scope. So there'll be that limit, which is a delegated act. You'll be able to say, well, that's not actually within our scope, but we can provide this level of data within the VSME standard, even if not to the same granularity that that parent company might be asking for.
Yeah, great. Thank you. That's good. Stephen's asked another interesting question here about whether member states have been inspired by CSRD and even gone above and beyond that and asked for even more. And he's sort of reflecting that against the US, where there's different states that have introduced different levels of regulation, and I don't know if we've yet seen all of the states finalize, sorry, all of the member states finalize exactly how they're going to interpret it. Is it Germany that's still got some work in progress there? So work in progress.
Yeah, there's a couple of member states that it's still in draft form, or it's been introduced to the national parliament or whatever that lawmaking body is, but it's not yet been signed into the EU law. I think from when I was making the map and looking in the different member states, there was very little evidence, I think, of particular gold plating, potentially because the requirements from the CSRD are already quite stringent. There's a lot of data points. So I don't think there's been a huge amount of gold plating. I think what has been different between the different member states is the level of sanctions for non-compliance. And obviously there's kind of broad level in terms of reputational risks, for instance, but I think the different member states will be able to set different financial levels, penalties, fines for non-compliance. And that will be something that each member state decides for themselves. So there's an element of they could decide almost the severity or the penalty for non-compliance.
No, that's great. Thank you. A question for Murgarel, and apologies if I've pronounced your name incorrectly. Just wondering whether CSRD can still be a good tool to help understand carbon footprints, especially in the supply chain, perhaps with a slight relaxation of how deep one needs to now go into supply chain, or whether there are alternative approaches that can be used to help identify all that detail.
That's a really good question. I'm not sure of the exact data points that are included in the ESRS, but I think that scope 1, 2 and 3 data points are highly likely to be ones that are there, just because so many companies are already reporting on them, that it seems like there are other areas that are beginning to gain progress, such as biodiversity impact, for instance, but carbon reporting, most companies have been doing that for quite a long time now. So I think the carbon footprint data will almost certainly be retained in the ESRS and probably in the VSME as well. So I think that it's likely that that data is still going to be collected, and potentially mandating it means that more companies will start to move towards that 2030 target for being able to report on scope 3 emissions. Scope 3 obviously slightly trickier to calculate, but I think that's where a lot of the supply chain emissions obviously sit. So I think it will gradually increase the number of businesses that are able to report on scope 3 emissions, and then that gives greater transparency to larger companies whose scope 3 emissions are obviously dependent on lots of different suppliers, both upstream and downstream.
Yeah, that's right. And of course, for those of us who've been in this industry for a while, trying to navigate the complex jigsaw of Scope 3 emissions is one of the biggest challenges we've got. Initiatives like CDP have been really helpful, and plenty of corporates well ahead of CSRD have been very, very proactive in engaging with their supply chain around trying to get that data. Thank you, Kat. And thanks for your question, Mugarel. And then Alex, as he said, it's not a question, just a statement for us to reflect on briefly. But the European Parliament typically actually has been very strong and has good ambition around the environment. So wondering whether the omnibus relaxations will fall. So, just wondering how things will actually pan out as it goes through the relevant iterations in the coming months or not. So yes, time will tell on that for sure. I'm reading this incredibly live, so Rebecca has just typed something in, so thank you, Rebecca. Let's just see if this question is one we can tackle together. To what extent is the CSRD overlapping with the other frameworks like TNFD, or addressing issues considered in other frameworks like CBAM, and how should businesses address the overlaps among these requirements? And my initial view on this, by the way, is globally we are seeing an aspiration to consolidate because there is a very significant a realization that there's an increasing burden on reporting and regulation, and so we are starting to see a consolidation and certain standards emerging. So within these specifics, I'm not too sure on the detail. Kat, do you have anything on these ones in particular?
I think I agree in that obviously the TNFD is looking at nature-related dependencies, impacts, risks, and opportunities. I think it's highly likely that the ESRS will include that, probably to slightly less detail, in that, of course, the ESRS covers a huge range of topics, whereas the TNFD is very focused just on nature impacts. But yeah, I think that there will probably be quite a lot of overlap. But as Richard said, there's, I think, recognition of the fact that the proliferation of voluntary standards is quite a challenge for businesses that are trying to show best practice and lead the way. That can often mean having to comply with a whole range of different voluntary standards. So I think there's a movement to try and incorporate those into more standardized formats, which is, of course, exactly what the CSRD is aiming to do. So I think that there is quite a lot of overlap. And in terms of addressing the overlaps, potentially there'll be less reliance on those voluntary standards going forwards. Or if you still wanted to report on both, hopefully the same data can be reported on both, so there's less of a reporting burden.
Yeah, and the thing we've seen with some of our clients is even if the reporting output needs to be put in two different places, the way they run that program, the way they manage their internal stakeholder management sessions, the way that they think about the tools they need to consolidate the data and look at data quality, there's lots of commonality there. So that can make the process a little bit more efficient whilst we wait for the relevant external bodies to think about how they can consolidate the outputs as well. So yeah, I think reasons to be optimistic about that. Great. I haven't seen any more questions come in, and we are nearly at time as well. So I think we'll take that opportunity just to do a final thanks. So Kat, thank you so much for the time you've invested in this. It's an excellent half an hour or so presentation. And as importantly, thank you to everyone who took the time to listen to the webinar. For those that will pick up on this on the recording if they haven't been able to make this slot, and for all the people that asked some really great questions. So yeah, thanks again, and I hope the rest of your days go really, really well.
Thank you, everybody. Bye.
Thanks.